Hey everyone, welcome back to the channel. Today we're going to talk about what's been going on in America this week. Today the big story is the U.S. added 178,000 jobs. Unemployment dropped to 4.3%. That signals a resilient economy, not a weak one. But at the same time, the ongoing conflict providing in Iran is triggering a global energy shock. Oil prices are rising fast. At the time of this recording, oil prices are around 110 per barrel. And that's pushing gas prices higher, transportation costs, and inflation back into focus. There's even a concern about disruption through the Strait of Hormuz, which controls around 20% of global oil supplies. Right now, the stock market is conflicted. On one hand, you have the strong jobs, strong consumers, good corporate earnings. But on the other, strong economy, the Fed may not cut interest rates. And what does that exactly mean? The stock futures dipped a little bit this week. Treasury yields jumped to around 4.3%, and Bitcoin and tech stocks also pulled back. Interesting. Mortgage rates just jumped to about 6.46%, the highest in months. Why? Because of rising oil, rising inflation, and high mortgage yields. But there is a little bit of a twist. Despite the highest rates, the housing market is still holding up surprisingly well. Inventory is up 5.7% year over year. Prices are actually starting to decline a little bit, and homes are still selling relatively quickly. So what's really happening here? We're in a lock-in effect. Fear of future rates market. What is the real estate outlook? Short term, slight price softness, slower affordability. Midterm, inflation stays high, rates stay high, puts pressure on prices. The car market, if you're interested in a new car, this week vehicle sales are actually strong, running at around 16.3 million per annual pace. Basically, what's been changing is because of the rising gas prices, SUVs and trucks are becoming more expensive to operate. Purchase demand towards hybrids and EVs are starting to rise. Interest rates are still high, however, for car loans. Monthly payments are also elevated. So what happens next, ladies and gentlemen? Well, to go from here, everything comes down to three variables. Oil prices, the Federal Reserve, and consumer strength. If oil prices keep rising, inflation is going to stay high, rates are going to stay high. Federal Reserve is going to take a wait-and-see approach, and it's all affecting your pocketbook. So the final takeaway here is I want to tell you that the U.S. economy is still strong. Stocks are volatile because of rate cuts are uncertain. Real estate is stable but pressured by rates. Cars are still selling, but affordability is tightening. If you're investing, buying property, or even just thinking about your next big purchase, this is the kind of environment where timing and strategy matters more than ever. Stay sharp, stay informed, and stay ahead of the market.